Welcome to the Introduction to Payday Loans. In this session, you will learn what is a payday loan, what does APR mean, what factors can affect your credit score, and why does this affect you. So the annual percentage rate, or APR, is used to provide a guide to repayment costs and provide a benchmark for comparing between lenders. So in simple terms, a loan of £100 taking out over a year at an APR of 10% will cost £110 or an additional 10%. So let's think of the APR as the cost or price of borrowing. Several factors affect the APR at which a person can borrow. These can include your credit rating. So the safer you are in the credit provider's eyes, the lower APR you can usually get. So if you are employed with no record of missing payments and perhaps a homeowner with no other credit cards, etc., then you will typically be offered better terms than someone without these. Your credit rating is held by 3 independent companies who provide the service to the finance industry. Factors affecting your credit score include your job, salary, prior payment history, home status, electoral roll, and even if you have a landline telephone. Other factors contributing to APR including the length of the loan, so longer term usually means a lower rate, and also whether the loan is secured, which means tied to something you own, like property or a car. So this is why a mortgage usually has the lowest APR, because it's long term and it's secured against the property. Some finance companies and so-called payday lenders offer short-term loans at very high interest rates, ranging between 800 to 3,600%. Their acceptance criteria is generally lower than high street banks, for example, and so their business model anticipates that a percentage of borrowers will default or not be able to pay back the loan. Customers who don't pay their loans are basically paying extra to offset those who don't. Here's some examples of typical payday lenders. The biggest one of all is Wonga. Let's recap. APR stands for annual percentage rate and is the price of borrowing. Your credit rating is a score which is held by one of the 3 companies and is based on factors such as your income, your repayment history, how long you've lived at your address, electoral roll, and more. We'll go into more detail on another session. Payday lenders such as Wonga, Sunny, or QuickQuid that you may have heard of provide easy access to borrowing but charge very high interest rates. That's the end of this session.